Hello, everybody. Welcome to Wednesday. The S&P 500 was up 0.07% today. The big news was about the stimulus bill that didn't get signed yet. I've said in the past that I don't think the stock market needs the stimulus bill to still do quite well. I think the vaccine has to do well. But if that happens with low interest rates and pent-up demand, I think that's enough to create a pretty decent market going forward. The stimulus bill and any others that they might do is just like rocket fuel. It'll be really incredible if they do it. It's obviously needed for other issues, and I'm not trying to diminish that at all. My job is to kind of point out what happens with the stock market. But what is important today is just really to see some of the rotation. Portfolio design is really critical. We have multiple pieces that are out there. We have advanced healthcare, innovative technology, value stocks, clean energy, and the broad market indexes. And the idea there is that we don't know for sure where things are going to go. And today is a perfect example of that. So value has been lagging for a bit here, for a few weeks. And innovative technology and clean energy have been really, really running. Well, today, clean energy did okay. Innovative technology didn't do well, was underperforming, but value did well, was our big winner today. And again, that's why you have those pieces. Identify where the money runs to over periods of time. So back in October, we started to see money running towards value. So I added that to the portfolio, and that's what you want to do. So I think it's important to understand those different pieces. Let's talk a minute about what's happening with value and how that works. So a value stock is considered something that is inexpensive compared to its earnings or its book value or its dividend or something along those lines. But one of the problems with value stocks is that sometimes they're value stocks for a reason. There's something going on. There's something wrong. Maybe we don't even know what it is yet. Or they have really high debt levels, or maybe they're about to go out of business. So one of the things that we look at is for indexes where they screen a lot of that out. So let me show you kind of how this works. Okay, so first of all, this is a chart from yesterday. This is iClean. This is the iShares clean energy piece. I just want to show you, this is an example of a momentum index. It just means it's really running, right? It's got lots of momentum, and it was up another 1.6% today. Whereas a value index is quite a different look. It basically has come down, has not come back up yet, is possibly undervalued. And you can see really, things started to move here in October, and we've had this nice run and a good run today. This is FOVL, which is an iShares focused value piece. I'll just show you a little bit of details about it. So it's all in the United States. This is from ETF.com, by the way, which is one of my favorite sites for looking at ETF information. It's half financials and then, basic materials, energy, consumer cyclicals, utilities, et cetera. You can see, the top 10 holdings here, some recognizable companies and whatnot too. But what they're doing is they're starting with the Russell 1000, and they are eliminating companies that have high volatility. They're eliminating companies that have high debt ratio compared to their equity, and they're eliminating companies that have poor analyst reviews. And so with what they have left, they rank them based on their earnings, their dividends, their cash flow, and their book value. And they buy the top 40 out of that ranking. And so what that does is it creates a higher quality grouping of stocks to pick from. And I like that aspect of it quite a bit. I think it's a really clean way to play value. And today certainly was a great day to own it. It's why we have it. And again, I think it is important long term to, we can't day trade. We can't move it out. I could have moved last night into value thinking it was going to go up today. You kind of already have to be there. If the ball keeps going to third base and you don't have anybody there, you got to get somebody over to third base and you got to cover that area. One of the tricks is to not always cover areas where the ball is not going to at all. So you do have to watch for that. But that's part of the portfolio design, is to just make sure that we've got those pieces in place. And so I'm really glad that we had value in the portfolio today. It really paid off. So thank you very much for watching today, and I look forward to talking to you tomorrow. Thank you.